Hey everyone, so are you ready to see how this election might shake things up in the financial world?
Absolutely.
Yeah, especially with all this talk about a Trump comeback, right?
Right.
We've got some interesting pieces here, one from the Financial Times and one from Reuters,
Okay.
both digging into like Wall Street's reaction to this whole thing.
Yeah.
So are you ready to dive in?
Let's do it.
All right, let's see what they're saying.
One of the things that really jumps out from these articles is this almost palpable sense of excitement coming from certain parts of the financial industry. Like even relief.
Yeah, almost like a party's getting started, right?
Yeah.
Like on Wall Street, bankers, private equity firms, hedge funds,
Yeah.
they're all buzzing about this potential wave of deregulation.
Yeah, definitely. And the markets are reacting.
Right.
You know, just looking at the share prices of some of the major players, Capital One, Discover, Apollo, Carlyle, KKR, they all saw some pretty significant jumps after the election. Investors are definitely betting on a more relaxed regulatory environment.
So break it down for us. Why is deregulation such a cause for celebration in these circles?
Well, you have to remember that regulations, while important, they can be seen as kind of a headache for financial institutions. It means more compliance costs, less flexibility, and some even argue that they can stifle innovation and profits. So deregulation is kind of like, in their eyes, taking off the training wheels. You know, more freedom to operate, potentially leading to higher profits.
Okay, that makes sense. So what specific changes are they hoping to see? What's on their wish list?
Well, these articles highlight a few key areas. First, there's a lot of talk about rolling back this thing called the Basel III Endgame proposal.
Okay.
This set of regulations designed to increase capital requirements for big banks.
So trying to tackle that too big to fail problem. Right?
Exactly. They'd have to hold more money in reserve in case things go south.
So they're hoping to loosen those reins.
Exactly. Their argument is that these stricter capital requirements could stifle lending and harm the overall economy. Of course, you know whether that's actually true is debatable.
Right. What else? What else are they hoping to see change?
Another big one is easing the rules around mergers and acquisitions. This could lead to, like, a consolidation wave in the banking sector. So imagine applying for a mortgage, but there's only, like, 2 mega banks to choose from.
Wow, so the big players just get even bigger.
Potentially.
Yeah.
Anything else?
There's also a lot of anticipation around easier access for, like, everyday investors to alternative investments, like private equity and crypto. Right now, those are often restricted to like institutional investors or high net worth individuals.
Yeah, it always feels like a very exclusive club. You can't even get in the door.
Exactly. So loosening those restrictions could open up some new opportunities, but also potentially expose retail investors to higher risks. Right, there's always two sides to that coin. So we've got, on the one hand, the potential for increased activity, innovation, and profits. But then on the other hand, there are legitimate concerns about stability and consumer protection, right? Things potentially getting a little out of control.
Exactly. And it's important to note that not everyone's celebrating these potential changes. Global financial watchdogs have already expressed concerns about the risks associated with this deregulatory push, especially when it comes to global financial stability. I mean, we've seen what can happen when things go unchecked, right?
Right. Like 2008. No one wants a repeat of that. Speaking of people who might not be thrilled about this whole shift, one name keeps popping up, Gary Gensler, the current SEC chair.
Right.
He seems to be like public enemy number one for many in the financial industry.
Yeah, he's definitely ruffled some feathers.
Yeah.
He's been leading a pretty aggressive regulatory push, cracking down on what he sees as excesses and loopholes in the system. And to the chagrin of many on Wall Street, he's proposed a whole slew of new rules.
So what's his agenda? What's he trying to achieve with all this regulation?
Well, in essence, he's aiming for greater transparency, fairness, and accountability in the financial markets. He wants to protect investors, ensure a level playing field, and try to prevent another financial meltdown. Whether his approach is the right one, that's definitely a matter of opinion.
Sure.
But he's definitely made an impact.
And it sounds like the industry is counting on his departure, right?
Absolutely. With a change in administration, there's a very strong expectation that Gendler's days are numbered. And the rumor mill is already churning about who might replace him. Names like Dan Gallagher, a former SEC commissioner, and Hester Pierce, a current commissioner known for her, well, let's just say industry-friendly views, are being floated.
Okay, a changing of the guard. Are there any other regulatory shakeups that we should have on our radar?
Well, I think beyond specific names, the expectation is a shift in tone. The Biden administration had a more adversarial stance towards the financial industry. But now there's talk of a more collaborative approach. There's a quote here from Jack Inglis, CEO of the Alternative Investment Management Association, who anticipates a more restrained and targeted approach to financial regulation.
Okay.
And I think that sums up the sentiment pretty well.
So it sounds like we're heading towards a more relaxed, industry-friendly regulatory environment.
Yeah.
But you mentioned earlier that not everyone is popping champagne just yet.
Right.
What potential downsides or uncertainties are kind of giving even the most optimistic Wall Streeters pause?
Yeah, there are definitely a few whispers of caution out there,
Oh.
and some potential speed bumps on this road to deregulation.
Ooh, okay, this is where it gets interesting. Tell me more.
Well, for one, while Trump has signaled a generally pro-business stance,
Right.
he's also hinted at the possibility of capping interest rates on credit cards, which of course would be a blow to bank profits
Yeah.
and could create some tension between the administration and the financial industry.
Interesting. So even with a deregulatory push, there might be some very specific areas where the administration might step in. What else?
Another potential point of friction is the Republican interest in limiting how much financial institutions can consider these ESG factors.
Okay, remind me what those are again?
Yeah, so ESG stands for environmental, social, and governance.
Right.
And there's been a big push for companies to consider these factors in their lending and investment decisions.
Okay.
So limiting their ability to do so could have ripple effects throughout the entire financial system.
Okay, so that could definitely complicate things. So we've got some potential big wins for the financial industry, but also, some big risks if deregulation goes too far.
Definitely.
And it sounds like there's a lot of uncertainty about how all of this will actually shake out.
Absolutely. There are so many moving parts, and it's still very early in the game.
Yeah.
We really need to watch how the new administration approaches these issues and what specific policies they put in place.
Right. It's not just about who gets appointed to these key regulatory positions, but the actual rules and regulations, what gets enacted, what gets repealed.
Exactly. And it's important to remember that there can be unintended consequences when it comes to financial regulation. What looks good on paper could end up having all these unforeseen negative impacts once it's put into practice.
Okay, so stay tuned, folks. This is just the beginning of a very complex and potentially impactful story. But speaking of impact, these articles also mention some concerns from global watchdogs. This isn't just a U.S. story, is it?
Not at all. The financial world is deeply interconnected, and decisions made in one country can have ripple effects across the globe. And as we've seen time and time again, financial crises rarely stay confined within national borders.
Okay, that raises an interesting question. What are the global implications of all this? I'm ready to explore that. Are you up for it?
Let's do it. All right, so we talked about this potential deregulatory shift, right?
Yeah.
But how might this actually play out in the real world? Are there some tangible examples?
That's what I'm curious about. How could these changes impact the financial world and ultimately trickle down to our everyday lives?
Well, let's look at mergers and acquisitions. A more relaxed regulatory environment
Okay.
could really open the floodgates for consolidation in the banking sector. Remember the articles mentioned Capital One and Discover?
Oh, yeah.
Those two big credit card companies
Oh.
they're currently trying to merge.
Yeah, that definitely stood out.
Well, under the Biden administration, there was a lot of scrutiny of these mega mergers, especially when it came to their impact on competition
Yeah.
and consumer choice.
Right.
But a new administration could mean a whole new set of priorities.
Okay, so it's possible that a merger like Capital One and Discover,
Right.
which might face some serious pushback before, could now get the green light a lot easier.
It's definitely a possibility. And think about what could happen. If those two giants combine, it could trigger a domino effect. Other banks might feel like they need to merge just to stay competitive.
Right.
We could end up with a situation where just a handful of massive institutions control even more of the market.
And what does that mean for us, for the everyday consumer? What could this mean for our credit cards or loans, mortgages, all that?
Well, that's the million-dollar question. There are a few potential scenarios, right?
Okay.
On the one hand, increased consolidation could lead to less competition, which could mean higher fees, higher interest rates, and fewer choices for consumers.
Hold on, wait. Does that mean like my credit card interest rates could go up?
It's one possibility, yeah.
Ugh.
But of course, the industry argues that more efficient banks could actually lead to lower costs and better services.
Okay.
They argue that economies of scale, combined with less regulatory burden, could allow them to pass on those savings to consumers.
Yeah. Right.
Whether that actually happens, we'll have to wait and see.
Yeah, it's a wait-and-see situation.
Right.
What about the impact on investors?
Okay.
I mean, we already saw those positive market reactions, but what could this mean in the long run?
Well, for investors, particularly those with a higher risk tolerance,
Okay.
deregulation could open up some pretty exciting and new opportunities. Remember how we were talking about the possibility of easing restrictions on access to alternative investments, like private equity and crypto?
Yeah, those have always seemed like kind of the exclusive playground of big institutions and the ultra-wealthy.
Exactly. But if those rules are loosened, everyday investors could get in on the action, potentially leading to higher returns.
Okay.
But of course, higher potential rewards also come with higher potential risks.
Right, exactly. You don't want to just jump into that blindly.
Exactly.
Speaking of things you don't want to jump into blindly, what about these potential regulatory rollbacks? Are there any specific regulations that are likely to be targeted?
Well, aside from the Basel III Endgame proposal,
Right.
there's been a lot of speculation about changes to the Volcker Rule.
Okay, remind me, what was the Volcker Rule again?
So it was a key part of the Dodd-Frank Act, which was passed after the 2008 financial crisis.
Right.
The aim was to basically prevent another meltdown.
Oh.
Essentially, the Volcker Rule prohibited banks from engaging in these, risky trading activities. Specifically, something called proprietary trading.
Okay, proprietary trading, what is that?
It's where banks are essentially betting with their own money. Before the Volcker Rule,
Oh, okay.
banks were basically allowed to gamble with your deposits.
Oh, I see.
You can think of it like this. It was like putting up a barrier between your savings and the casino floor.
So they were trying to rein in that casino banking?
Exactly.
That got us into so much trouble, right?
Exactly. The idea was to keep these traditional banking activities, like taking deposits and making loans,
Right.
separate from this riskier speculative trading.
Okay, got it. So is the thinking now that with this new administration they might weaken or even eliminate the Volcker Rule?
It's definitely a possibility. The industry has always argued that it's, too complex, too burdensome, and that it stifles their ability to generate profits.
Okay, but wouldn't rolling back this rule increase the risk of another financial crisis?
That's definitely the concern. Critics argue that weakening the Volcker Rule is essentially deregulating the very activities that led to the last meltdown.
Yeah.
It's this really tricky balance, trying to promote economic growth, but also safeguarding against systemic risk.
Right.
It's tricky.
So, okay, big potential wins for the financial industry.
Right.
But also, big risks if deregulation goes too far. And it just sounds like there's a lot of uncertainty about how this will actually shake out.
Absolutely. There are so many moving parts. Yeah.
And it's still very early in the game. We need to see how this new administration approaches these issues.
Right.
And what specific policies they put in place.
Right. It's not just about who gets appointed, but the actual policies
Exactly.
that are enacted or repealed.
Exactly. And it's important to remember that there can be unintended consequences when it comes to financial regulation, right? What looks good on paper could end up having unforeseen negative impacts once it's put into practice.
Okay, stay tuned, folks.
Right.
This is just the beginning of a very complex and potentially impactful story.
Absolutely. But speaking of impact, these articles also mention some concerns from global watchdogs. This isn't just a U.S. story, right?
Not at all. The financial world is deeply interconnected.
Right.
Decisions made in one country can have ripple effects across the globe. And as we've seen again and again, these financial crises, they rarely stay confined within national borders.
Okay, that raises the question, what are the global implications of all of this? I want to explore that. You with me?
Let's do it.
All right, so global implications. These articles definitely highlighted some concerns from those international watchdogs about this potential U.S. deregulatory wave. What are they worried about?
Well, you can imagine, right? Not everyone around the world is exactly thrilled about the U.S., potentially loosening its financial rules.
Right.
There's a concern that it could like set off this domino effect.
Yeah.
Lead to this global race to the bottom when it comes to financial regulation.
A race to the bottom. What does that even mean?
It means countries might start like competing with each other to have the most lax regulations, right? In an effort to attract financial firms and investment.
So it's like this regulatory arbitrage.
Like that.
Everyone's trying to undercut each other
Right.
just to gain that competitive advantage.
Exactly. And that can be a very, very dangerous game to play because it leads to a weakening of global financial standards,
Right.
which then makes the entire system more vulnerable to shocks and crises.
Yeah, it's like a collective action problem, right? Everyone might be individually better off in the short term
Right.
by, loosening their rules.
Right.
But in the long run, everyone suffers if it leads to a global meltdown.
Exactly. And that's why these international organizations, like the Financial Stability Board, they're sounding the alarm.
Okay.
They were set up after 2008, right, to try to coordinate global financial regulation.
So what are they saying? Like, what are their biggest concerns?
One is that this U.S. deregulatory push could totally undermine the progress that's been made on strengthening global capital requirements for banks. Remember those Basel III rules we were talking about?
Yeah, the ones that banks are hoping to see rolled back.
Right, the ones that would require banks to hold more cash in reserve.
Right.
Well, those rules were developed through international cooperation, right?
Right.
With the goal of making the global financial system more resilient.
Okay.
So if the U.S. starts backtracking, it could encourage other countries to do the same thing, right? And that weakens the entire framework.
Okay, so that's one concern. What else is keeping them up at night?
Well, another big worry is this potential for regulatory fragmentation.
Okay.
As the U.S. charts its own course, it creates this much more complex and fragmented global regulatory landscape.
Right.
And it makes it harder to monitor risk.
Yeah, instead of having this harmonized set of rules that everyone plays by,
Right.
you end up with this patchwork of different regulations, and then who knows what's happening.
Right, and how do you address problems before they spiral out of control?
Right.
That's a recipe for instability.
So this really could have global repercussions, huh?
Yeah, it really makes you think.
What are the potential consequences if these fears actually materialize?
I mean, worst case scenario, right? It contributes to another global financial crisis.
Right.
If regulatory standards are weakened and risk-taking is increased,
Right.
well, that creates the perfect conditions for a major meltdown.
Right.
And as we've seen before, these crises can have devastating consequences.
Yeah.
Right? Recessions, job losses, economic hardship.
That's scary. No one wants to go through that again.
Absolutely. And that's why it's so important to have a balanced and well thought out approach to financial regulation.
Yeah.
It's not about stifling innovation or
Yes.
preventing banks from making profits. It's about making sure that the system is stable and fair and resilient enough to withstand these kind of inevitable shocks,
Right. Find that sweet spot.
Exactly.
Right. You can promote economic growth, but also manage risk at the same time.
Precisely. And I think that's going to be the challenge for policymakers around the world.
Yeah.
They'll be grappling with this for years to come.
So we've covered a lot today.
We have.
Potential excitement, opportunity on Wall Street, concerns about consumer protection, systemic risk, and now worries about global instability.
It's a lot.
Yeah, it's a lot to digest.
Yeah.
What's the key takeaway here for our listeners? What should they be thinking about as this story continues to develop?
Well, here's the thing. This might all seem very, abstract and far removed from your everyday life.
Right.
But it's actually deeply connected to your world. The decisions that are made by regulators and policymakers, the actions these big banks and investors, the stability of the global financial system, these things directly impact your job security, your retirement savings, even your ability to, get a loan, right?
Right.
And, of course, it impacts the overall health of the economy.
So don't just tune this out, folks.
Right.
This stuff matters.
It matters a lot.
It matters a lot.
Stay informed. Pay attention to how these changes are unfolding, and don't be afraid to ask tough questions and hold those in power accountable.
That's great advice. We've covered a lot of ground in this deep dive, but it feels like, this is just the beginning
Oh yeah, this is just the start.
of a much longer conversation.
For sure. This story's just getting started, and we'll continue to follow it very closely.
Yeah.
We'll keep bringing you the latest insights and analysis.
Every step of the way.
Absolutely.
All right, folks. Well, that's it for our deep dive today, but the conversation doesn't have to stop here. What are your thoughts on all this? This potential for a deregulation tsunami. Head over to our website or our social media, share your thoughts with us, let us know what other topics you'd like us to explore. Until next time, keep learning, keep questioning, and keep diving deep